Good evening, all. On behalf of WRC, I welcome all of you for this series on income tax. Today's topic is tax deducted at source. Now I request Dakshesh Chokshi sir to start the session.
Good afternoon, everyone.
Good afternoon. Good evening, sir.
Just a moment. I will just start the screen share. Hope my screen is visible now.
Yes, sir.
Fine, great. Just give me a moment. Today's topic is tax deducted at source, that is TDS and TCS. I would say that TDS is really a tedious topic, and in today's session, we would try to cover the important provisions of the TDS. So first, let's understand what are the different method of collecting the tax by the income tax department. The one is advance tax, another is self-assessment tax. The third one is tax deducted at source and tax collected at source. So out of these four sources, TDS and TCS plays a very important role for the government of India. Why? So globally, TDS and TCS are considered to be an effective tax strategy to collect the tax. It is an indirect method of collecting the tax. In this method, the government collects the revenue at the source of income itself. So that's why it results into the preponement of the collection of the tax. Normally what happens in other taxes, first the income is earned by the taxpayer, by the SSC, and then the tax payment is made. Here, the tax is being collected at the first source of generation of income itself. So it results into early realization of the tax by the government. More so, it also ensures a regular source of revenue for the government because the payments are an ongoing process, and whenever the income is generated, it results into the source of revenue for the government. It also provides a greater reach and wider base for collection of the tax. Same thing is about the TCS. While selling some specified things, the seller has to collect the tax from the payer who has purchased them. So this method of TDS and TCS results into collection of tax from small number of players rather than large number of payees. So it becomes very easy process for the government to collect the tax. Secondly, it becomes easier for the government to collect the tax from the payers because the payers are already within the jurisdiction. The payees, it's not necessary that payees maybe or may not be in the jurisdiction. So it helps the government to collect the tax from the payers who are otherwise outside the jurisdiction. It also prevents evasion of the tax. It results into lower cost of tax collection, and it brings new assessees to the tax net. So make this effective strategy, it has been the focus of the government to have more focus on the TDS and TCS. It helps in larger expanding the tax base. It's very easy process, and it expands the horizons of the assessees. So with this background, let's first understand what are the changes made in the recent budget as far as the provisions of TDS or TCS are concerned. First is section 194N. Under section 194N, a banking company or a cooperative society or a post office carrying the business of banking are required to deduct tax on cash withdrawal exceeding rupees 1 crore in a year from any persons. The TDS rate is 2%. Now it is sought to increase this limit from rupees 1 crore to rupees 3 crores. This aspect. One, the assessees who are filing return of income. The second part, the assessees who are not filing income, return of income, their income tax returns. So for such non-filers, presently TDS is deductible at 2% for cash withdrawal from 20 lakhs to 1 crore and at 5% exceeding rupees 1 crore. So under the present budget, there is no change in this existing limit as far as non-filers of returns are concerned. Another change is about section 193. As per proviso 9 of section 193, TDS is not required to be deducted on interest payable on securities which are in demat form and listed on a recognized stock exchange in India. So as per these provisions, at presently, TDS is not required to be deducted on listed debentures. By the amendment, it is sought that now TDS would also get applicable on interest payment to even listed debentures. Another amendment is about section 194, which is about TDS on winning from lotteries or crossword puzzles. Here, the intention of the government is to expand the scope of such winning. So the word has been increased, the scope is increased to include winning from gamblings or betting of any form or nature whatsoever. Under section 194BA, a new section is inserted that TDS has to be deducted on net winnings at the time of withdrawal from the user account. Now this section speaks of the online games. We know that presently there are a lot of portals where they provide the facility of such online gambling or online games. So now it is sought that TDS would be deducted on the net winnings. Once the user, there would be two counts. Once the user withdraws the fund from his account, then TDS is required to be deducted at the time of such withdrawal. And suppose if the user decides not to withdraw amount, but the same amount is maintained in his kept in the account itself, then TDS would be deducted at the end of the financial year. Another change is about to TDS on winnings from horse race. Presently, the limit to deduct TDS was rupees 10,000 per transaction. So if somebody is betting on the horse race and in one such betting is he wins an amount which is less than 10,000, then TDS was not applicable. The amendments provides that now TDS would be not on the single transaction, but it would be aggregate of amount exceeding 10,000 rupees during the financial year. So presently, what was happening, if suppose someone is winning 10 horse races and the winning from each of such horse race is say less than 10,000 rupees, suppose in all such 10 races he has won 9,000 rupees. So as each transaction limit has not crossed 10,000, no TDS was required to be deducted. The government felt that it is a loophole and the people are trying to take advantage of the provision by splitting the revenue. And so instead of per transaction limit, now they have made that aggregate of amount exceeding 10,000 rupees during the entire financial year would be subject to TDS. Another important amendment is in section 206C1Z, that is CCS on foreign remittances. Here, any foreign remittances has now become subject to TCS. There are two parts of it. One is for the education, another is for other than education. In education, there are two parts. Somebody has taken a loan from any financial institutions for education purpose, like education loan. And out of such loan, the disbursement, the remittance is being made, then TCS would be 0.5% if it is exceeds 7 lakhs rupees. Up to 7 lakhs, there is no TDS. And if it is other than educational loan, if it is from the own sources or for medical treatment, then TCS would be at 5% if it exceeds 7 lakhs rupees. So other than education and medical, for any other purpose, it would be 20% straight away. This is a very important amendment, and I feel that it's very beneficial to the SSCs because SSCs were facing some practical difficulties about the claiming of TDS credit. What was happening that in sometimes the SSC used to credit the income say in year 2, whereas the payer used to credit it in the year 1 and used to deduct the TDS. Now the SSC has credited the income in year 2 where there is no TDS, and the TDS has been deducted in the earlier year. So this was creating some practical difficulties on the part of the SSC to claim the TDS credit. So the proposed amendment is proposes to remove the difficulty of claiming such TDS credit, which is reflecting in the subsequent years as against the corresponding income offered to tax in the earlier years. So with this background of major changes in the recent budget, let's try to study the important provisions under the Income Tax Act pertaining to TDS and TCS. As I said in the beginning, TDS is really tedious. As we see, there are number of sections under the TDS, like section 192, which speaks of TDS from salary. Then we have got 192A, withdrawal from Provident Fund scheme. We have got section 193, which speaks of TDS on interest on securities. Then we have got section 194 speaks about TDS on dividend. Then we have got section 194A, TDS from interest other than interest on securities. Then we have got section 194B, TDS from lotteries. TDS from lotteries and your section 194BB, winning from horse race. Section 194C, payment to contractors, subcontractors. 194D, insurance commission. 194DA, TDS from payment of life insurance policies. 194E, non-resident sportsmen sports association. The list goes on. 194. Now in 194 itself, we'll see there are various subsections, various provisos has been added. 194 EE, payment in respect of NSS. 194F, payments for repurchasing units of mutual fund UTI. 194G, commission on sale of lottery tickets. 194H, commission brokerage. 194I, rental income. 194IA, sale of immovable property. 194IB, payment of rent by certain individuals, HUFs. 194IC, payment under joint development agreement. 194J, fees for professional technical services. 194K, TDS by mutual funds or unit trust. 194LA, compensation for compulsory acquisition of immovable property. 194M, TDS on certain payments by individuals or HUFs. Then we have got 194N, TDS on payment of certain amount in cash. 194O, TDS on payments by e-commerce operator to e-commerce participants. 194P, TDS in case of specified senior citizens. 194Q, TDS on payment of 194R, sorry, 194R, TDS on benefit or perquisite in respect of business or profession. 195, payment to a non-resident or to a foreign company. 196A, income of a mutual fund to a non-resident. 196B, units owned by offshore funds. 196C, interest or dividend for foreign currency bonds or shares. 196D, income from securities held by FIIs. 197, non-deduction or deduction at a lower rate. So as we see, the government focus on collecting the TDS, collecting the tax at source itself, because this helps the government to expand the scope for preponement for early realization of the income and widening the tax base. So over the years, new and newer sections have been added under the TDS and TCS provisions. Now, one of the important amendment which was made was regarding section 206A, requirement to furnish permanent account number. Now, government has focused that it's almost compulsory that one should submit the permanent account number, because it helps the government to track the receipts or income of that particular SSCs. So now they have come out with different provisions. If you furnish PN, then you are at level 1. But if you fail to furnish permanent account number, then you will be subjected to a TDS at a higher rate. So let me read the sections 206A, which says notwithstanding anything contained in any other provisions of this Act. So this section supersedes all other provisions of the Act. Any person entitled to receive any sum or income or amount on which tax is deductible under Chapter 16B, 17B, hereinafter referred to as deductee, shall furnish his permanent account number to the person responsible for deducting such tax, hereinafter referred to as the deductor, failing which tax shall be deducted at the higher of the following rates. So it has been made mandatory, almost mandatory, for the recipient that is required to submit the permanent account number, and if he fails to submit, then he will be facing TDS at a higher rate. What are the rates? At the rate specified in the Act, or at the rates in force, or at the rate of 20%. So higher of this would be applicable if he fails to furnish permanent account number. Another section is about 206A, TDS at a higher rate if income tax return is not filed. So under these sections, the persons who do not file the income tax returns are sought to be penalized by imposing TDS at a higher rate. Who is liable to deduct tax? The person paying any sum to the specified persons. Now we'll see who is called the specified persons. So whenever a person makes a payment to such specified persons, is liable to deduct the TDS at a higher rate. He has to deduct the TDS when the amount is credited to his books account or when the payment is made, whatever earlier of the two. So let's understand what is the specified person. Specified person includes the person who has not filed income tax return of 2 previous years immediately before the previous year in which TDS is required to be deducted. The time limit of filing of income tax return as per section 139(1) has expired. So any person who has not filed his returns for the previous 2 years would subject to these provisions, and the higher TDS rate would be applicable if total of TDS and TCS is more than 50,000 rupees in each of the 2 previous years. Now here the specified person does not include a non-resident who does not have a permanent establishment in India. So how I hope this is clear. The person should have filed income tax returns for the previous 2 years. If he has filed return for 1 year and for the another year he has not filed, then he will not be subject to these sections. It's ensured that he has not filed return for both the years, and TDS and TCS amount in each of the previous 2 years should exceed 50,000 rupees. So rate of TDS, where tax is required to be written under the provision, the tax will be deducted at twice the rate specified in the relevant provisions, twice the rate in force, or 5%. So higher of these two would be applicable. However, this section is not applicable on certain payments like TDS on salary, TDS on withdrawal from EPF, TDS on winning from lotteries, cross-purposes, etc., TDS on winning from racehorses, TDS on income in respect of investment in securitization trust, and TDS on cash withdrawal. So under this, if TDS is required to be deducted under these provisions, then section 206AB is not applicable. Whether the SSC has filed the return or not return will not make any difference. The provisions of section 206AB overrides all other provisions of the Income Tax Act. will apply even if SSE has lower or nil TDS certificate, or he has filed a declaration under section 197A for non-deduction of tax, or is otherwise not liable to file the return of income. So even if the SSE has got certificate for lower deduction at a lower rate or nil deduction, this section would override it. The TDS would get applicable as per the rates which we discussed just now. But this provision will apply only if tax is otherwise is deductible. So if TDS is not deductible, then this section would not be applicable. So suppose for professional fees, the threshold limit is 30,000 rupees. So if the payment is less than 30,000 rupees, where no TDS is required to be deductible, then naturally these provisions are not applicable. So now let's try to understand different scenario, whether the person would fall under the category of specified person or not. So whether section 206AB would be applicable or not. So in the first scenario, the SSC has filed return of income for both the years. So naturally, once he has filed return of income for both the years, this section is not triggered. In the second scenario, he has filed return of income for 1 year. So as he has filed return of income for 1 year, this section would not get triggered because the criteria is he should not have filed return for both the previous year. So in the second, the same scenario is applicable. He has not filed return for one previous year, but he has filed return for the previous year too. So this will not be applicable. In the next, he has not filed return of income for any of the 2 years. And TDS and TCS amount for both the years exceeds rupees 50,000. So the conditions specified under section 206AB are satisfied. So here the section 206AB would get applicable. In all other cases, as we see, either return of income has been filed for one of the previous 2 years, or the TDS and TCS amount for any of the two previous years is less than 50,000. So this section will not get triggered.
Which are made no, which are cut which are
So let's try to summarize what is the difference between 206A and 206AB. 206A is applicable for non-furnishing of permanent pen, and higher of rate specified or 20% gets triggered. TDS is required to be deducted at this rate, whereas under section 206AB, non-furnishing of ITR, here higher of twice the rates or 5%, whichever is higher, TDS is required to be deducted. So let's understand what are the duties of TDS deductor. So under section 203A is required to obtain 10. Now in certain deductions, it specifically provides that 10 is not required. So except those exceptional cases, the deductor is required to obtain 10 number, that is tax deduction account number. Is required to deduct tax from income or payments or credit to the account of the payee as per the applicable provisions, and deposit such tax as per the applicable provisions. He has to quote the PAN number of the payee on challan TDS certificates returns, and is required to furnish various return statements as per the provisions of the Act. Now, even if he has deducted TDS, he has deposited the TDS, but if he fails to furnish the returns, then he also would fall as a SFC in default. Now let's try to understand. We'll not be able to see all the sections, but I have shortlisted certain important sections and would uh, study that one by one. First, let's study section 192 TDS on salary. So any employer is liable to deduct TDS from salary paid to his employee. TDS is got to be deducted at the time of actual payment. So when merely the provision is made in the books of account, TDS does not get triggered. Only when the actual payment is made, TDS is required to be deducted. And TDS is required to be deducted only if the estimated salary exceeds the amount chargeable to tax. If the total income of the employee falls below the maximum amount which is chargeable to tax, then no TDS is required to be deducted. So what the employer is required to do? So at the beginning of the year, he should estimate total salary of the employee, should deduct the permissible deductions, arrive at the taxable salary, and compute the tax. And you should divide this annual tax by 12 months, and you should start deducting the tax from the first month itself. So it's not necessary that he should continue to deduct tax at a uniform rate or the uniform amount throughout 12 months. The monthly TDS amount can be increased or decreased as per the need. So while allowing deductions, while calculating the TDS, he can allow certain deductions under Chapter 6A. So these are the permissible deductions for which he can give credit. Section 80C, CCA, CCB, Triple C, CCD, 80D, 80DD, 80E, 80ZZ, 80RRA, 80U. What are these sections? We are going to see this Chapter 6 tomorrow. So we'll see what are those sections where deduction is available. So it is the duty of the employer to satisfy himself about the various deductions as claimed by the employee. So employee just cannot blindly allow the deductions. He has to just prima facie satisfy himself about such deductions. Suppose employee is not satisfied about any such claim, so he can disallow the same. But that does not mean uh, that employee cannot claim such deductions. So employee can claim such disallowed deductions in his return of income. He can submit the necessary proof along with his return of income and claim such deductions which was earlier otherwise not allowed by the employer. So while arriving at the TDS liability of an employee, the other income of the employee may also be added. However, suppose the employee has losses, then the employer is required to ignore such losses unless such a loss is from the head income from house property. Like as we have seen when we studied the income from house property, the income under this head can be negative because of the benefit of interest which is available to the assessee. Claim interest on the loan taken from for the purpose of house property. So if the employee is having loss under the head income from house property, then the employer can consider such a loss and can arrive at the tax liability of the employee accordingly. Another section is section 192A, which speaks of TDS from withdrawal from provident fund scheme. So if an employee withdraws from the provident fund scheme, this section is triggered, but but this section does not get triggered if there is a continuous service period of 5 years. It's a termination before 5 years for reasons beyond the control of the employee. For example, the employee was working in, say, company A, and he worked there for 3 years, and then company itself got closed down. So now it's not the control of the employee, it's like beyond the control of the employee to continue or to remain in the employment, because the unit itself is now closed down and all the employees have been retrenched. So unless such circumstances, the continuous service period of 5 years is required. He has resigned before 5 years and he joins another company which maintains recognized PF account, and the old balance with the previous employer is transferred to this account. Then for a calculating continuous period of 5 years, the service at the previous employment would also get added to this new employment, or entire balance is transferred to the national pension scheme. Now, minimum taxable premature withdrawal should be 50,000 rupees. TDS at the rate of 10% if the employee is having the PN, and if he is not having the permanent account number, then at the maximum marginal rate. Here also, the employee can ask for no deduction by submitting form 15G and 15H, stating that his total income does not exceed minimum taxable amount. So even after withdrawal from the this scheme, is income is below the minimum threshold limit, then he can claim no deduction of TDS by submitting the form 15G or 15H as may be applicable to him. Section 194, TDS from dividend. TDS is required to be deducted at 10%, maybe equity or maybe preference shares. It's not deductible if the SSC obtains certificate from the assessing officer by making application in form 13 for payment without deduction or at a lower rate, or he furnished declaration in form 15G or 15H, or the dividend amount is less than 5,000 rupees. Section 194C, TDS on contractor. This section gets triggered when there is a contract between the specified persons and the resident contractors. So what are those specified persons? The specified person includes central government or state government, any company, any firm, any local authority, cooperative society, trust, or housing society, or individuals or HUF if total sales gross receipt exceeds rupees 1 crore for business and rupees 50 lakhs for profession in the preceding financial year. So this section is applicable to individual or HUF only if receipts from business was more than 1 crore or from profession more than 50 lakhs. It gets applicable if single payment exceeding rupees 30,000 is made, or aggregate amount credited, paid, or likely to be credited or paid exceeds rupees 1 lakh. Section 194I, that is TDS on rent. Here also, for applicability to individual and HUF, rent should be more than rupees 50,000 per month. Total sales receipts from business should be more than 1 crore and profession from profession more than 50 lakhs. Otherwise, it is applicable to any persons who is paying rent exceeding rupees 2,40,000 in a financial year. So in a financial year, it's not like calculated to be monthly 20,000. It is to be seen the total amount in a financial year exceeding 2,40,000. So if it is the case of plant and machinery, then TDS would be at the rate of 2%. If it is land, building, or furniture, TDS would be at the rate of 10%. here TDS on immovable properties is also important provision, which was which is covered by section 194 IA. Any person being a transferee responsible for paying to a resident transferor any sum by way of consideration for transfer of any movable property shall at the time of credit of such sum to the account of the transferor or the time of payment of such sum in cash or by issue of a check or draft or by any other mode, whichever is earlier, deduct an amount equal to 1% of such sum as income tax thereon. So here, by section 194 IA, any sale of immovable property is made subject to TDS. If the amount of total consideration exceeds rupees 50 lakhs, then TDS at 1% is required to be deducted. Now earlier we see that 10 is required to be obtained by all the deductor, but here even if it's not necessary that the deductor should purchase the 10. So provision of 10 is not applicable. Even if he does not, he is not required to obtain 10 merely for making payment under this section. So this is also a very important section where all the transactions of immovable properties are sought to be covered. So the idea is to keep a track of all such transactions of purchase and sale of immovable property. Section 194M, TDS on payment by individuals or HUF. Here, individuals or HUF, other than those responsible to deduct TDS under section 194C, 194H or 194I, if they make any payment or credit any sum to a resident for carrying out any work including supply of labor or for carrying out any work in pursuance to any contract by way of commission other than insurance commission and brokerage or by way of professional services. And if the recipient is non-resident, the TDS is required to be deducted as per. And if the recipient is non-resident, then it will not fall under this section, but it will fall under section 195. So here the TDS will be deducted under section 194M to only resident SSEs. So here individual HUF deducting TDS is also not required to obtain 10. He can deposit TDS using his permanent account number. So TDS would be deducted if payment exceeds rupees 50 lakhs in a financial year. Here also TDS at the rate of 5% if the permanent account number is furnished. If permanent account number is not furnished, then rates as per section 206 AA. If return is not filed, then section 206 AB. So here both these sections which we discussed earlier, section 206 AA and 206 AB would get triggered. So if the employee, if the recipient is not does not furnish his permanent account number, then TDS rate would be increased from 5% to the rate specified under these sections. And if both the sections are applicable, 206 AA and 206 AB, then whatever is the higher of these two would get applicable. One 194A, payment of certain amount in cash. We saw this earlier when we discussed about the changes in the recent budget. So whenever there is a cash withdrawal from any banking company or a post office, TDS is required to be deducted. If ITR is filed, if the cash payment is exceeding rupees 1 crore, Then rate would be 2% if furnished the permanent account number, and 20% if permanent account number is not furnished. And if income tax returns is not filed for the preceding 3 assessment years, here instead of 2, the provision is of 3 assessment years, then 2% if amount is between 20 lakhs to 1 crore, and 5% if cash withdrawal amount is more than 1 crore. As we discussed earlier, the amount of rupees 1 crore, which is applicable for those who are filing income tax returns, is sought to be increased to 3 crores under the present budget, latest budget. So now the thing is, here there is a distinction which is being made between the persons who has filed return of income and the persons who have not filed income tax return. The question would come, how a banking company, how a bank or post office or a cooperative bank would know whether the person has filed return or not. So for this purpose, so that a banks can check whether return is filed or not, the income tax department has provided a utility of ITR filing compliance check. This is a website, that is report.inside.gov.in, which is available to banks to check whether the return is filed or not. Now, a complex provision about payments by e-commerce operator to e-commerce participant. New section was inserted, section 194O, whereby the payment by e-commerce operator to e-commerce participant was made subject to the TDS. Sale of goods, provision of services of an e-commerce participation is facilitated by an e-commerce operator through its digital or electronic facility or platform. Payment made directly by the purchaser of goods directly to an e-commerce participant shall be deemed to be an amount paid by e-commerce operator to e-commerce participant. The TDS rate is 1%, and threshold limit is, if it is for individual HUF, 5 lakhs, and for others there is no limit. We'll see this section in detail now. E-commerce operator, who is deemed to be the e-commerce operator? E-commerce operator means a person who owns, operates, or manages digital or electronic facility or platform for electronic commerce. Who is e-commerce participant? E-commerce participant means a person resident in India selling goods or providing services or both, including digital products, through digital or electronic facility or platform for electronic commerce. So any payment made by the purchaser of goods or recipient of services directly to an e-commerce participant for the sale of goods or provision of services or both, facilitated by an e-commerce operator, shall be deemed to be the amount rated or paid by the e-commerce operator to the e-commerce participant, and shall be increased for the purpose of reduction of income tax under these sections. Now, by way of an example, this appears to be a little complex, but by way of an example, we'll try to make it simple. So for the clarity, I would read the provisions and then we'll see the example. So who is e-operator? Means any person who operates digital or platform like Swiggy or Zomato. These would be the called e-commerce operator. E-commerce participant means any persons who sells goods or provide services using such digital platform. So any payment which is made by purchaser of goods or recipient of services, suppose we purchase the goods or we receive the services. So any payment made by the purchaser of goods or recipient of services directly to an e-commerce participant for the sale of goods or services of both, which is facilitated by an e-commerce operator, shall be deemed to be the amount credited or paid by the e-commerce operator to the and included in the gross amount of such sale or services for the purpose of reduction of income tax under this section. So we'll see this by for an example. However, no deduction is required if the e-commerce participant is an individual or HUF. The gross amount of sale or service of both during the previous year doesn't exceed rupees 5 lakh, and the e-commerce participant has furnished his permanent account number or Aadhaar number to the e-commerce operator. Now let's see by of an example. Suppose ICAI places the food order at the Taj Hotel through Swiggy. So there is a conference which is going on at ICAI, and for the participant, the food order is placed from the Taj Hotel, but not directly to the Taj Hotel. So who is the purchaser here? ICAI is the purchaser. Who is the e-commerce operator? E-commerce operator is the Swiggy. Now see, say the purchase cost is 100 rupees. So the food cost is 100 rupees. The Swiggy would add the delivery charge. So Swiggy has added 5 rupees of the delivery charge. And whenever we see the portal, Swiggy, they provide the options whether you want to add tip or not. So we have added tip of rupees 2 to the guy who will bring the food to us. And so total, ICI will make a payment of rupees 107. So what Swiggy would receive? 107. Out of that, Swiggy would charge commission from the Taj Hotel, because Swiggy is facilitating the sale of a hotel or a restaurant. So they get commission from the business which they procure for such restaurant or hotel. So say their commission is 10 rupees plus delivery charge, which was collected was 5 rupees and tip was 10. So net amount which will go to the Taj would be 90 rupees. So how the TDS would get attracted? Here under section 1, the TDS would be in two part. One would be 194O and another would be 194H. How 194O? That Swiggy is making the payment of rupees 100. So on 100 rupees, TDS at 1% would be made. Now there is another part of that where the commission. So it is the commission income for Swiggy. So TDS under section 194H would be required to be deducted by Taj Hotel on payment of such commission. So if there's a commission rate, TDS rate is 5%, then they would deduct TDS on 10 rupees commission. So this is how the section 194O would get operated. Now, a concept of equalization levy has been levied. So this is a tax levied on consideration received or receivable by a non-resident for any specified service such as online advertising, any provision for digital advertising space, or any other facility or service for online advertising. This is levied at the rate of 6%, and this is levied from a person resident in India, a non-resident having PE in India, so let's understand the scope of equalization levy. So Chapter 8 of Finance Act was amended by Finance Act and provisions regarding equalization levy were inserted. Here EL extends to consideration received or receivable by an e-commerce operator for e-commerce supply or services on or after 1st April 2020. If it is facilitated to a person resident in India, to a non-resident person in India, and this is for sale of advertisement or sale of data collected from the person. So this is like for the purpose of online advertisement, where concept of equalization levy was brought in. So let's see the difference between 194O and equalization levy. So who is liable to deduct and deposit? 194A, e-commerce operator is liable to deduct the tax and deposit with the central government. Same way, equalization levy, e-commerce operator is also liable to deposit the levy with the central government. The difference is about the residential status of e-commerce operator. For 194A, e-commerce operator can be a resident or non-resident, whereas equalization levy is levied in the case of a non-resident. So what should be the residential status of e-commerce participant? E-commerce participant should be resident in India. E-commerce participant can be a should be a non-resident, and sale of goods and provision of services should not be effectively connected with the PE in India. Who should be the customer? Customer can be resident or non-resident. Customer can be resident or non-resident, and rate is 2%, 1%, or 2% of consideration received. So equalization levy is not forming part of the Income Tax Act. So non-resident e-commerce operator will not get credit in their home country. So there is a difference. Equalization levy is not part of the Income Tax Act. Now let's understand the TDS liability under section 194O. Let's see the four scenario. First is sale of own goods. So whether TDS under section 194 gets triggered? No. If it is a sale of its own goods, then section 194O does not get triggered. Now, if services provided through own sources, here also section 194A does not get triggered. Now, non-resident e-commerce participant facilitating the sale of goods or services, here also e-commerce participant, as it is non-resident, section 194O is not gets attracted. Resident e-commerce participant facilitating sale of goods or services. So only in this scenario, section 194O would get triggered. Now let's see another important sections, section 206C1H, TCS from sale of the goods. Here, TCS is to be collected by the seller only if his total sales or gross receipts exceeds rupees 10 crores during the preceding financial year. Here, what is covered is only supply of goods. Supply of services is not covered. Now, TDS to be deducted at 0.1% if PAN is furnished, at the rate of 1% if either PAN or other is not furnished, and at the rate of 5% if ITR is not furnished. So TCS is to be collected from sale consideration received in excess of 50 lakhs. The trigger limit is 50 lakhs rupees. No tax is to be collected if the buyer is liable to deduct TDS on the goods purchased by him from the seller. Now, wherever the sections, there is a conflict whether the seller is where both the seller and buyer are liable to deduct tax, and it would be the duty of the buyer first to deduct the tax. So if the buyer has already deducted the tax, then the seller is not liable to deduct the TDS. And if it is a case of export, then also TCS is not to be made. So 206C and 194Q. 206C speaks of the TCS from sale of goods, and section 194Q speaks of TDS on purchase of goods. Now we will study this both the sections a little bit in detail. we'll try to also to understand the difference between the two and how both the sections operate. So section 194Q, which is TDS on purchase of goods. A buyer who is carrying on a business whose total sales, gross receipts or turnover from the business exceeds rupees 10 crores during the financial year immediately preceding the financial year in which such goods are purchased is liable to deduct TDS. So the turnover of a buyer should exceed rupees 10 crores during the preceding financial year. There is purchase of goods from a resident and goods purchased for a value or aggregate value exceeding rupees 50 lakhs in the previous year. So both the conditions needs to be satisfied: turnover 10 crores, volume of 50 lakhs. So tax is required to be deducted at the time of credit of such sum to the account of seller or at the time of payment thereof, whichever is earlier. So the buyer is required to make TDS at 0.1% value exceeding rupees 50 lakhs. However, if the seller has not furnished the pen or other, then TDS would be at the rate of 5%. So now let's understand the difference between 194Q and 206C1H. Like as we see, 194Q is the TDS liability is on the buyer. Buyer is liable to TDS, to deduct TDS. 206C TCS, it is seller's liability to deduct TCS. The limit in both the cases is rupees 10 crore for the buyer, same way 10 crore limit for the seller. The turnover in the preceding year should be more than 10 crores. Value of the purchase should be more than 50 lakhs rupees. Same way for 206C, value of the sale should be more than 50 lakhs rupees. In both the cases, either TDS or TCS, it's required to be deducted at 0.1%. Tax to be deducted on purchases of more than 50 lakhs. In both the cases, the limit is more than 50 lakhs. Now, section 194Q will get triggered even if payment is not made. Even when in the books of account, the entry for the purchase is made and the account of the supplier is credited, the TDS liability would arise. So under section 194Q, TDS is required to be deducted either at the time of credit of entry in the books of account or at the time of actual payment, whichever is earlier. Whereas section 206C, TCS is required to be made only at the time of receipt of the payment. So it happens that in certain cases, both sections might get triggered. The both buyer and seller is having limit, have got the turnover of exceeding 10 crores. The value of purchase and sales is more than 50 lakhs. Then where both the sections gets triggered, the liability first would be arise under section 194Q. So if both the sections gets triggered, then it would be the purchaser who would be liable firstly to deduct the TDS. So once the purchaser has deducted the TDS, then seller will not be liable to make the TCS. However, the purchaser is liable, but purchaser has not deducted TDS. He has failed to make deduction of the TDS. Then the seller would be liable. Seller will have to make the TCS. So to summarize, both the sections again 194Q 206C. One speaks of one case the buyer is it's buyer's liability. Another case it's seller's liability. The threshold limit in both the cases is same 10 crores. value of purchases should be more than 50 lakhs. The rate of TCS is also same, 1%, 0.1%. However, the difference is in case of 194Q, even if the payment is not made, if merely entry in the books of account is made crediting the account, TDS gets triggered, whereas 206C, TDS liability gets triggered only at the time of receipt of the money. And wherever both sections are applicable, it would be the purchaser who would be primary responsible to deduct the TDS. Only if purchaser fails to deduct TDS, it would be the responsibility of the seller to deduct TCS under section 206C. So let's understand by way of an example whether TDS liability would arise under section 184Q or under section 206C. So in the first case, the turnover of the buyer is exceeding 10 crores. Same way, turnover of the seller is also exceeding 10 crores. Purchase is also exceeding 50 lakhs rupees. So here, both the cases in the both the sections gets triggered. So TDS liability would be firstly of the buyer under section 194Q. In the second case, the turnover of the buyer is exceeding 10 crores, whereas turnover of the seller is less than 10 crores. The purchase is exceeding 50 lakhs. So here, as the turnover of the buyer is more than 10 crores and purchase value is exceeding 50 lakhs, section 194Q gets triggered. So here, the liability would arise under section. In the third scenario, the turnover of the buyer is less than 10 crores, whereas turnover of the seller is more than 10 crores. So as in the third scenario, the turnover of the buyer is less than 10 crores, section 194Q does not get triggered. So he is not liable to deduct TDS. So here, but as the seller's turnover is more than 10 crores and purchase value is exceeding 50 lakhs, TCS would get attracted under section 206C1H. In the fourth scenario, the turnover of the buyer and seller both is less than 10 crores, but purchase value is exceeding 50 lakhs. However, there will not be any liability towards TDS or TCS as the turnover of neither buyer nor seller is more than 10 crores. So this is how sections 206C and 194Q operates. So let's make it a simplified version. Suppose if you are a seller, let's first understand how the liability would arise. So if we are a seller, then first we have to see whether transaction value is more than 50 lakhs or not. If transaction value is not more than 50 lakhs, then section 206 is not applicable. So there is no question of TCS would arise. So at the first instance itself, the transaction value is less than 50 lakhs, section is not applicable. If transaction value is more than 50 lakhs, then we have to see whether turnover in the immediately preceding financial year exceeded 10 crores or not. So if it has not exceeded 10 crores, then you are not liable for TCS. However, if it has exceeded 10 crores, then you have to see, yes, you becomes liable, but then you have to see whether buyer has deducted TDS or not. So if buyer has deducted TDS, then you are not liable. If buyer has not deducted TDS, then you are liable. So to make it simple once again, if we are a seller, first we need to understand whether the transaction is more than 50 lakhs or not. If it is not, then this section itself is not applicable. If the transaction is more than 50 lakhs, then we have to see whether the turnover, whether our turnover was more than 10 crores or not. If it was not more than 10 crores, then again this section is not applicable. And if it is more than 10 crores, then both the conditions, turnover exceeding 10 crores and transaction value of more than 50 lakhs, both get satisfied. So the liability under section 206 gets arisen. But here, once again, we have to see whether purchaser has made TDS or not, because the primary liability to deduct TCS rests with the purchaser. So if purchaser has deducted TDS, then we are not required to deduct TDS. And if purchaser has not deducted TDS, then yes, the liability under section 206 will get arisen. And we as a seller would be required to deduct TCS. Same way, let's see in the case of a buyer. If we are a buyer, then what we have to see? We have to see whether the transaction value is more than 50 lakhs or not. If transaction value is not more than 50 lakhs, then naturally this section is not applicable. If the transaction value is more than 50 lakhs, then we have to see the turnover, whether turnover in the immediately preceding year exceeded 10 crores or not. If the turnover immediately preceding year exceeded 10 crores of rupees, then we are liable to deduct TDS under section 194Q. And it has not exceeded 10 crores, then liability does not arise. So this is how these two sections, one section 206 and section 194Q operates. So here also by this, by introducing these two sections, the government has expanded the scope of TDS and TCS to a much larger extent. Section 194R, this was introduced by Finance Bill 2022, whereas TDS on perquisites was sought to be covered. So let's read the Finance Bill 2020. As per clause 4 of section 28 of the Act, the value of any benefit or perquisite, whether convertible into money or not, arising from business or exercise of profession, is to be charged as business or profession income in the hands of recipient of such benefit or perquisite. However, in many cases, such recipient does not report the receipt of benefit in the return of income. So this is what the finance minister said while presenting the finance bill 2022. This, the recipient of such benefit or perquisite does not report the receipt of benefit in the return of income, which leads to under-reporting of income or inaccurate reporting of income, whereby tax thereon is not determined and paid. To avoid such consequences and to widen of the tax base, section 194R is introduced in the Act. So the basic purpose of introducing any provision of TDS or TCS is to plug the loophole in the system, to plug the underreporting or inaccurate reporting of any income, and to widen the tax base, and to control any payment or any receipt which can be taxable. So by providing the TDS, such income which otherwise would not have come to the network of the taxability is brought under the tax network. So what is the bell language of section 194R? Any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession by such resident shall, before providing such benefit or perquisite as the case may be to such resident, ensure that tax has been deducted in respect of such benefit or perquisite at the rate of 10% of the value or aggregate of value of such benefit or perquisite. Now it's very important to understand this bad section. So this section is applicable any person who is responsible for providing to a resident any benefit or perquisite. So benefit or perquisite any, whether convertible into money or not. So it's not necessary that benefit or perquisite which has been provided needs to be convertible, should be such that which is convertible into money. Even if it is not convertible into money, the section gets triggered. But the next part is very important. Such benefit should arise from business or the exercise of a profession. Arising from business or the exercise of a profession. So if any such benefit or perquisite has got no connection with the business or no connection with the profession, then section 194R would not get triggered. Section 194R would get triggered only if such benefit or perquisite is connected to the business or the profession. If the amount of the benefit or perquisite exceeds rupees 20,000, TDS at the rate of 10% is to be deducted by any person providing benefit or perquisites to a resident person. Applicable only if the business turnover a person is exceeding rupees 1 crore and that of the profession is exceeding rupees 50 lakhs. So if we as a professional provides any benefit on perquisites and our gross receipt does not in a year does not exceed rupees 50 lakhs, then we are not covered under section 194R. As said earlier, benefit should arise from business or profession, whether convertible into money or not. So connection to the business or profession is an essential condition to trigger section 194R. Tax under section 194 of the Act is required to be deducted whether the benefit or perquisite is in cash or in kind. So let's read the first proviso to subsection 1 of section 194R, which states that provided that in a case where the benefit or perquisite, as the case may be, is wholly in kind or partly in kind or partly in cash or and partly in kind. Let me read again. Provided that in a case where the benefit or perquisite, as the case may be, is wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability of deduction of tax in respect of whole of such benefit or perquisite, the person responsible for providing such benefit or perquisite shall, before releasing the benefit or perquisite, ensure that tax is required to be deducted. Tax has been paid in respect of the benefit or perquisite. So this is very important provision. As said earlier, the section is applicable for both the benefits, whether convertible into money or not. So the benefit or perquisite can be in cash or can be in kind also. Now let's see a scenario where the proportion of the benefit which is in kind is substantial and the proportion of the benefit or perquisite which is in cash is very minimal. Now when you would deduct the TDS, naturally you will not be able to deduct the TDS from the perquisite which is in kind. Naturally you will have to depend on that portion which is being given in cash. So now this is a scenario where the benefit or perquisite which is given in cash is not sufficient to cover the tax liability the under section 194R, because 194R TDS would get attracted on both the value, which is given in cash, which is given in kind, as the benefit which is given in kind is substantial. The benefit which is given in cash is very minimal, and the benefit in cash does not cover the entire tax liability. Then this provision says it casts on the duty on the payer to ensure that before you make available such benefit or perquisite, ensure that tax which is required to be deducted has been paid in respect of such benefit. So the recipient will have to ensure that before the release of such facility, the receiver, the TDS is deducted. Either you take that amount from the employee or whatever, or from the beneficiary, but you have to ensure that the TDS liability for the entire portion is met out. So this is applicable when a person gives incentives other than discount rebate in the form of cash or kind, such as car, TV, computers, gold coin, mobile phone, or when a person sponsors a trip for the recipient and his relatives upon achieving certain targets, when a person provides free ticket for an event, when a person gives medicine samples free to medical practitioners, which is being used by the medical practitioner for the self purpose. However, freebies provided on purchase of certain items would not be subject to section 194R. Therefore, suppose if one item is provided free on purchase of three items, then such freebies is not called the perquisites or benefit. Just a moment. So, like when we say that when a person sponsors a trip for the recipient, but suppose a seminar or conference is arranged at say Dubai or say Mauritius or some outside place, but then it will not be treated as perquisites if all the days is being spent for the seminar or conference. So if any expenditure which is the liability of the person carrying on business is met by or reimbursed by some other person, the same would be regarded as benefit or perquisite for the person who had primary liability of incurrence. So by this clause, they have tried to cover all such payments where the liability or was of some other persons and it is reimbursed by some other persons. So if any expenditure which is the liability of the person carrying out business is met by or reimbursed by some other person, the same would be regarded as benefit or perquisite for the person who had the primary liability of incurrence. So if the invoices of expenses are in the name of service recipient client, reimbursement would not qualify as benefit or perquisite. So suppose we have gone for an audit, we are staying in say hotel and we obtain the invoice. Now, if the invoice is in the name of the client company, and then the client company, we make the payment and client company reimburse us the expenses, then it will not fall under this head. It says if invoices of expenses are in the name of service recipient client, then reimbursement would not qualify as benefit or perquisite. But if any such invoice which is in our name and expenses is being reimbursed by the client company, then section 194R would be applicable. Section 194R provides that in case where benefit or perquisite is wholly in kind or partly in cash and partly in kind, and if part of the cash is not sufficient to meet the TDS liability, the person responsible for providing such benefit or perquisite must ensure that taxes have been paid before releasing the benefit or perquisite. The tax deductor can rely on the declaration from the recipient that appropriate taxes have been discharged along with a copy of the advance tax payment challan. The advance tax challan number can then be linked to the TDS return to be filed by the deductor. Now, this section would not apply to the salaried individual. If any benefit or perquisite is given to the salaried individual, then it is not subject to section 194R. For salaried person, one has to follow section 17(2) and the valuation rules, and TDS is required to be made under section 192, which is income from salary. So if any benefit or perquisite given to employee is not covered under section 194R. Now another important section is section 206, which is TCS on sale of certain goods. By introducing these sections, the government has tried to plug the loophole whereby the sale of frivolous items were remained out, where the people were trying to play with the sale of such frivolous items. So let's understand what is section 206. Every person being a seller shall, at the time of debiting of the amount payable by the buyer to the account of the buyer, or at the time of receipt of such amount from the said buyer in cash, or by the issue of a check or draft, or by any other mode, whichever is earlier, collect from the buyer of any goods of the nature specified in column 2 of the table below is sum equal to the percentage specified in the corresponding entry in column 2 of the said table of such amount as income tax. So what the section is trying to say, whenever the sale of the items like liquor, like tendu leaves, like timber or forest products, or scrap, other minerals, coal, iron ore, or lignite, whenever the sale of such transaction takes place, then the TCS is required to be deducted at the rate which is given corresponding to the respective items. So the government is trying to collect TCS on sale of all such goods and trying to track the sale of such items. Section 2061A, notwithstanding anything contained in subsection 1, no collection of tax shall be made in the case of a buyer who is resident in India if such person furnishes the person responsible for collecting tax a declaration in writing duplicate in the prescribed form and verified in the prescribed manner to the effect that the goods referred to in column 2 of the aforesaid table are to be utilized for the purposes of manufacturing article or things, or for the purpose of generation of power and not for trading purposes. So here an important proviso has been provided. The idea of deducting TCS on sale of such goods like scrap or timber or iron ore, if it is used for manufacturing purpose, then this section is not applicable. This section gets applicable only if it is being used for trading purposes. So while trading of such items, the tax was being evaded, or such trading transactions were kept out of the tax net. So to plug such a loophole, the section has been brought in to tax sale of certain items by way of a trading. So here, what is the meaning of scrap? So it's very important to understand the scrap, because scrap is a very generalized term. Anything which is useless or anything which is not required can be termed as the scrap. So they have given the definition of scrap. Scrap means waste and scrap from the manufacture or mechanical working of materials, which is definitely not usable as such because of breakage, cutting up, wear, and other reasons. On a plain reading of the above provisions, it would appear that sale of any material which can be used as such for any purpose would not fall within the definition of scrap, and hence would not attract the provision of TCS under these sections, even though such products may be termed as waste or scrap in the normal trade parlance. So here to get this section attracted, it's not necessary that any waste which is uh, which is uh, given for sale, the section would get applicable. The scrap has to arise from the manufacture or mechanical working of materials, which is definitely not usable as such because of breakage, cutting up, wear, and other reasons. So only when the material falls under this definition, it would be termed as the scrap. Another issue that needs to be debated is if a manufacturer has generated any scrap which is not directly or indirectly having any nexus with his manufacturing process, would such an entity still need to collect TCS on such scrap sold by it? So this issue first came up for consideration in Navin Fluorine International Limited. The tribunal in this case held that the scrap item generated must have a direct nexus with the manufacturing process. So in case the scrap cannot be related to the manufacturing process, it cannot fall under the definition of scrap. Hence, the collection of TCS would not arise in such a case. So as said in the earlier definition of scrap which we studied, the scrap should have generated out of the manufacturing process. So if a scrap which is not an outcome of the manufacturing process got no nexus directly or indirectly with the manufacturing process, then such item would not be considered as scrap. And as the item does not fall in the definition of scrap, naturally section 206C, section TCS not required to be made under section 206. So now we'll see section 194J, which is fees for professional or technical services. Any person other than individual who is not subject to tax audit, professional service, technical service, royalty, and non-competent fees. If a consolidated bill is given for fees as well as out-of-pocket expenses, then TDS will get applicable on the entire bill. But if a separate bill is given for reimbursement purposes, then such bill will not be subject to TDS. So what are the consequences of default of TDS and TCS? So section 205 says where a person who is required to deduct tax at source does not deduct or after deduction does not pay will be deemed to be an SSC in default. So a person who is required to deduct tax, either he fails to deduct or after deducting the TDS, he does not deposit to with the central government, then he is considered an SSC in default. And similar provisions is also applicable in case of TCS under section 206C. So once the SSC is in default, he would be liable for penalty proceedings under section 221, interest under section 201 1A, besides the payment of the arrears. So if an SSC has not deducted TDS or has not deposited the TDX, he can be subjected to interest also and penalty proceedings also. Now let's see certain illustrations where TDS and TCS default was unearthed by the department. It's a case of Jaipur Vidyut Vitran Nigam Limited, which was a power distribution company. So here the survey was carried out by the income tax department, and it was found that company was paying huge amount as transmission charges in the form of billing charges, SLDS charges, and no TDS was being deducted. So they carried out a survey and they found that these particular the transmission charges were very technical service, and such technical service cannot be done without the support of technical team. So this arrived at the conclusion that basically this service falls under the professional fees because it was a technical fee, technical services, huge technical team was required, and the payment was basically of a technical nature of a technical fees. And so the payment was subject to TDS under section 194J, and the amount involved was 971 crores. So that was a very big case where after the search, it was found that the nature of service they had kept outside the purview of 194J, treating that transaction as transmission charges, but in fact it was a professional fees. Another case was case of Rajasthan State Tax Board, where the work of printing of books for the government schools was carried out. So they had entered into contract with suppliers for supply of paper, and there was a composite contract, like it was included transportation charges, loading, unloading, and staking. So it was held that it's not merely a transaction of purchase, but it was a composite contract, and which is liable for TDS under section 194C. Then we have got consequences, case of National Agricultural Marketing Federation of India. So they were procuring various agricultural products from farmers through marketing societies, and they were paying service charges to these societies. So it was held that these charges are in the nature of the commission, and TDS under section 194H is liable. So many times when we see the books of the client, we see that some clients they fail to identify the nature of the transactions. So sometimes due to such wrong classification of the transactions, the TDS is not deducted under the proper head. So it's very important for us as a professional to understand the nature of the transactions. And as we see, there are a lot of sections which gets triggered under the TCS. So we have to first understand the nature of the transactions, and then we have to arrive at particular sections under which the transaction falls. So even if a transaction is wrongly classified, and sometimes it happens that the client or the company deducts TCS under a wrong head. So under such circumstances also a default would get arisen, and the client would have to face the not only interest proceedings but also penalty proceedings. So where it's very important to understand the nature of the transactions and arrive at the correct head for reduction of the TDS or TCS. So with this background, I am through with my presentation. I have tried to cover only important provisions of the TDS and TCS. If anybody has got any question about whatever we have discussed so far, then the forum is free for discussion. Hello, I'm through with my presentation. If anybody has got anything further to discuss about whatever we have discussed so far.
Sir, Mr. Pugalendi has asked one question. It is in chat box.
Let me see the chat box.
Ah.
The query is regarding section 194R TDS on perquisites. The query states that if the benefit or perquisite is given in kind and not in cash, then how we will ensure TDS. So let's read the section, the language of the section once again. Any person responsible for providing to a resident any benefit or perquisite, whether convertible into money or not, arising from business or the excess of a profession, shall, before providing such benefit or perquisite as the case may be to such resident, ensure that tax has been deducted in the respect of such benefit or perquisite at the rate of 10%. Let's read the proviso. The first proviso to subsection 1 of section 194R provides that provided that in a case where the benefit or perquisite as the case may be is wholly in kind or partly in cash and partly in kind, but such part in cash is not sufficient to meet the liability of deduction of tax in respect of whole of such benefit or perquisite, the person responsible for providing such benefit or perquisite shall, before releasing the benefit or perquisite, ensure that tax required to be deducted has been paid in respect of the benefit or perquisite. So here, under section 194R, the TDS on perquisite is required to be deducted on both the counts, whether the perquisite is in cash or perquisite in kind. Now, let's come to the query. The query says that if the benefit is in kind, then how it will be, tax will be deducted. Now, exactly the first proviso speaks about that thing only. The first proviso has stipulated, has envisaged a condition where the cash portion is not sufficient to meet the entire liability. Okay, so here we'll have to, the deductor has to ensure that tax is paid. So if I'm giving you a benefit of say 1 lakh rupees of perquisite in kind, and I'm required to deduct tax at the rate of 10%, say I'm required to deduct tax of 10,000 rupees, then I have to ensure that tax is paid. So how I will ensure? Before releasing the benefit, I will ask the recipient to give me the tax amount. See, the section does not speak of that. The section speaks that if cash portion is not sufficient, then also the deductor has to ensure that tax required to be deducted has been paid. Now, I give you benefit of 1 lakh rupees. Now there is a tax of say 10,000 rupees. So who will bear the burden of 10,000 rupees? Naturally, the recipient has to bear the burden indirectly. So I will ask the recipient to pay 10,000 rupees and deduct and deposit it into tax. So that's only the practical way. See, in certain, like we play housey. In my city Ahmedabad, we have got a very large club, and they have got very mega housey show, annual mega housey show. The first prize would be like say a car worth say 25 lakhs rupees. Okay, so what happens? Somebody has won the car, so it is a and say value of 20 lakhs rupees. The full house, the car has been won, but then it is subject to the TDS. So how the TDS would be made? Because they are giving us the car. So what they do, they are, if the value is 20 lakhs and the tax is required to be paid 30 lakhs, they would ask the recipient to first deposit 6 lakh rupees. Only after that, once the tax amount of 6 lakhs rupees deposited, they will hand over the car. So some mechanism, see the act has very rightly made the proviso in this respect, that it may happen that cash portion may not be sufficient, but the duty has been casted it, to ensure that tax required to be deducted has been paid in respect of such benefit or perquisite. So this is the only way where we can ensure that required tax has been deducted and paid. So if there are no further query, we should we end the session?
Hello.
Yes, sir.
Hello. Sir, I would like just to put one question. I
Yeah.
mean, that is regarding 206C, 1H, and 194Q. Uh, if the value of good is say about 50 lakhs, suppose that, I mean, in certain case, if the purchase is made in a series, I mean, say the first part is purchased in this financial year and the second part is purchased in the next financial year. I mean, it may be some type of contract. I mean, it may be a sort of where the purchase is first part is made in the in financial year 1 and the second part in financial year 2. So, in case both the buyer and suppose the buyer and the seller both are below 10 crores in the first financial year, but they subsequently become and their turnover becomes above 10 crores in financial year 2. Then will this 194Q will be applicable?
नहीं देखिए the turnover का criteria देखिए. My screen is visible.
Yes.
My screen is visible. Now first read. See, a buyer who is carrying on business whose total sales, gross receipts or turnover from the business exceeds rupees 10 crores during the financial year immediately preceding the financial year in which such goods are purchased. So the turnover of the immediately preceding financial year is to be seen. If we are seeing the say financial year 23-24, then we have to see what was the turnover in the immediately preceding financial year, that is 22-23. If in the immediately preceding financial year the turnover is less than 10 crores, then naturally this is not triggered. Like see this table. whether turnover of the buyer or seller
Yeah,
exceeds
your-
10 crores.
So your
Huh?
so your screen is it is not visible like that way. It is just it is showing just a tedious. It is not showing the uh, presentation. It is just showing a tedious folder.
क्या बात करते हो? नहीं, पूरा सेशन में ऐसा रहा है.
Yeah,
Hello.
actually, hello.
Yeah, yeah.
Yeah,
In the
yeah,
entire
actually,
session, entire session went like that.
see presentation. Yeah, presentation is not coming. It is just showing. It's just folder is showing.
नहीं, अभी भी नहीं आ रहा है.
So your
एक second.
desktop is coming. Your desktop is coming, and
Oh, presentation is not coming.
no.
एक second. ये पूरे सेशन में प्रेजेंटेशन नहीं दिखाए आपको?
सर आपको एक्चुअली पावर पॉइंट फोल्डर दिख रहे हैं, बट
या सर एंटायर सेक्शन में
अरे यार,
नहीं दिखाया.
तो बहुत प्रॉब्लम हो गया. मुझे तो लगता है कि माय स्क्रीन इज विजिबल. एक मिनट, ये कैसे इतना प्रॉब्लम हुआ? तो मेरा तो प्रेजेंटेशन के बिना ही पूरा सेशन चला गया. एक सेकंड.
yes sir, it is coming. It is now, it is visible.
ओहो, और मुझे किसी ने बताया भी नहीं कि प्रेजेंटेशन स्क्रीन पे नहीं है. इतना बढ़िया प्रेजेंटेशन बनाया था, क्योंकि सी both visuals and all things combined gives
Right.
a better view. Now let's see, your query was, मेरा तो स्क्रीन दिख रहा है. अभी मैंने मोबाइल पे भी ओपन कर दिया है. जस्ट सी कि स्क्रीन पे आपको क्या दिख रहा है. This is visible now.
Yes, yes.
See, the requirement is the turnover of the buyer or the turnover of the seller should exceed 10 crores in the immediately preceding financial year.
Right.
See, the provision is from the business exceed rupees 10 crores during the immediately preceding financial year. Okay, if the turnover is not, so what we have to see is what was the turnover in the immediately preceding financial year. See, in the current year, the turnover might be more than 10 crores, but that would be applicable for the next year. As far as the current year is concerned, current year would be based on the turnover of the preceding financial year. So if in the preceding financial year turnover was not more than 10 crores, then
It
TDS
is not
liability will
applicable.
not apply.
It is not
Yes.
applicable. No. But the
Yeah. So
question that
now you see
I'm trying to
the
put is,
provision. Yeah.
if
Actually मेरा
the
presentation
purchase,
पूरा वेस्ट गया. ये तो मुझे तो बताया नहीं कि ये स्क्रीन पे आ नहीं रहा है, क्योंकि वो तो फोल्डर बताना तो कोई मतलब ही नहीं था ना.
yeah, that is big. In fact, actually, from the admin, it said that it is coming. So we were also not unable to understand what.
हाँ, क्योंकि ये मुझे फोल्डर बताने को कोई मतलब ही नहीं था ना. पता नहीं है क्या हो रहा है यहाँ पे. एक्चुअली मैंने अभी ना मेरे मोबाइल पे भी अपना मैंने ज्वाइन कर दिया, तो नाउ आई एम एबल टू सी व्हाट यू आर एबल टू सी.
Right.
क्योंकि आपके सामने presentation रहता, it would have become more easier for you to grasp the things also.
No,
क्योंकि
fine.
मैंने कंपैरिजन
I
जैसे
mean,
कंपैरिजन इस
yeah,
तरह से बताया था, फिर ये पूरा चार्ट है मेरा, देखिए ये चार्ट, विदाउट
yes,
दिस चार्ट it's very, if I say orally, so it becomes
right.
very this becomes very easy to understand when you see the flow chart also,
Right.
right? This
No,
flow
I
chart is
mean,
visible, right?
yes, yes, it's visible. I mean, but yes, the screen, and I mean, it is a little, it is visible, but I mean, the fonts are in very small.
Small font,
Yeah, it's in very small fonts. No, my question is, if a
yeah.
purchase can happen in a, I mean, it is not necessary that the purchase will happen in one cutoff point. It can happen in a two or three cutoff points. I mean, it may be a purchase above 50 lakhs, but it may be happening uh, a s- in a period of time. Any purchase is it can also happen in a period of time. I mean, if it's a say project type of a thing, if it's a big equipment which also needs to be installed and everything, the total
साल में 50
purchase.
लाख की purchase है, नहीं, I got
Yes, but
whether the 50 lakhs purchase is in a year or not.
yeah, no. What I'm trying to say is, if the purchase happens in 2 financial years, I mean, first
Right,
in year one and year two. So
right.
if I consider year one, then for year
Mhm.
zero, the turnover has to be above 10 crores.
Right.
If I consider the purchase in year one, then for year zero, the turnover has to be above 10 crores. And if I consider the purchase of year two, then the turnover of year one has to be above 10 crores. Now, it might so happen that in year zero, both buyer and seller had a turnover less than 10 crores. But in year one, one of them or both of them has a turnover above 10 crore. Now, the purchase happens in year one as well as in year two. So, if I consider year two, then obviously 194Q gets attracted. So if the and if in year one, then either of these sections are not attracted.
नहीं, मैं
Am I
आप
clear?
जो ईयर वन ईयर टू बोल रहे हैं उसमें मुझे थोड़ा कंफ्यूजन हो रहा है. What we have
Okay.
to see कि आपका, if we are talking of the current financial year, तो previous financial year में 10 करोड़ का टर्नओवर था कि नहीं, yes or no?
So in year
See,
zero,
if it was no,
then it is not
the year
applicable.
zero को आप कौन सा बोलते हैं? Year, which is your
Actually,
year zero?
year zero means what I'm saying. Suppose the purchase happens in the month of March of year one,
हाँ.
and it continues till April of financial year of next financial year. So the part of the purchase is, I mean, though the equipment is above 50 lakhs, but part of the purchase occurs in year one, and the part of the purchase occurs in year two.
हाँ हाँ, तो दिस सेक्शन दिस विल नॉट गेट ट्रिगर्ड. देखिए, आपको तो फाइनेंशियल ईयर देखना है. मार्च में 25 लाख की परचेज हुई, अप्रैल में 25 लाख की परचेज हुई, बराबर है. So that is not the consolidated purchase. The cutoff point is the financial year. एक financial year का turnover आपको देखना है. You cannot
I mean,
merge two financial year considering that
equipment.
it is resulted out of one transaction. No, it cannot be like this. See, if there is a single project and there is a
So if
single
it is
project,
right.
if it's a single project and the purchase is spread over 2 years, then we don't have to see whether it was a single project or not. What the Act specifies, they have to see the turnover of a financial year only.
Okay.
Okay, so irrespective of, we have to just ignore whether it is one project or two project or what is a single project. What we have to see is what is appearing in the books of accounts of that particular financial year.
Okay.
We don't have to go beyond that.
Fine.
Okay, and I'm very sorry for this matter, because all my efforts of preparing such a lengthy presentation didn't yield result, because now see here also I had prepared a table. If you see this table, then it becomes very easy for you to grasp also.
Maybe, sir, you can share the presentation so that,
Yeah,
so
I will
that
share
we
the
can go through
presentation.
it.
Definitely, I will share all my presentations. But if somebody would have pointed out, na, ki, sir, this is only the folder which is on the screen.
Yeah, actually, I think everyone was a little confused. I mean,
नहीं पर सर वो problem
yes, yes. I mean,
folder
yeah,
तो
everyone was not clear. What is,
हाँ
yeah.
चलो ठीक है, no problem. Tomorrow we'll make sure that presentation is visible.
Sir, we joined in the mid of the meeting, so we also don't know whether whether the presentation is
Yeah,
going
yeah.
on
See,
the
now,
same.
now my slides are coming on the screen, right?
Yeah, yeah, yes, it's coming.
Now you see the efforts of preparing.
We also have the doubt, but we are unable to raise the question because we joined in middle of the meeting.
Right.
Okay.
ठीक है.
Actually, what time you are starting, sir? Actually, I came myself.
We have started at 5 o'clock.
Actually, it is the it is mentioned as 6 o'clock in the brochure. That's why
In the
there is
brochure, it
confusion.
is 6 o'clock.
Yeah.
कौन सा? मुझे तो 5 बजे का मैसेज दिया है. Yesterday also the message. It is 5. It's 5 o'clock only. आपके पास कौन सा ब्रोशर है?
I think that it is an old brochure.
पता नहीं मेरे पास तो जो ब्रोशर है it speaks of 5 only. All the sessions are from 5.
Yeah, we downloaded that brochure through Institute website. That is the reason.
So I will just ask Ashish Bausa to check that whether this some wrong brochure has been downloaded there or not. Okay, then thank you for your support for nice hearing. Thank you. Bye.
Thank you, sir.